and I very much welcome the opportunity of commencing the second stage debate of this very important piece of legislation, the Protection of Residential Mortgage Holders Account Bill, Holders Bill 2014. And at its heart, this bill is essentially about consumer protection. It is about ensuring that all mortgage holders in this country have a level playing field, that they enjoy the same statutory protections irrespective of who may hold their mortgage at any point in time. The Ibrc mortgage holders, as we know, are now facing an imminent threat, but other mortgage holders could well find themselves in a similar situation if their bank, their financial institution, decides in the months or years ahead that they wish to sell off that particular mortgage. We know, Last Corla, that there are almost 13,000 Ibrc residential mortgage accounts, the vast majority of whom relate to family home mortgages. And those people stand to lose the vital protection of the Code of Conduct on Mortgage Arrears and also, critically, access to the Financial Services Ombudsman. They could find themselves potentially in a situation where they are left exposed and vulnerable, having lost statutory consumer protections, and would now be at the mercy of an unregulated, unsympathetic, foreign-owned fund who is simply out to make a quick buck on the back of their mortgage. That is the concern. It is a valid and legitimate concern, and that is the issue that we in Fianna Fáil are seeking to address by way of moving this particular piece of legislation in the House tonight. As we know, this issue has now taken on a degree of urgency because the deadline for the submission of final bids in respect of the €1.8 billion Ibrc residential mortgage book is the 14th of March. So this issue needs to be dealt with immediately. And Last Corla, I welcome the indications that we have from government by way of the statement this afternoon that they are not rejecting the bill at second stage, and it will pass second stage tomorrow evening. But I sincerely hope that that is not just a cosmetic exercise on the part of government, and I will return to that issue in a few moments. I am not for one moment claiming that this bill is perfect. It can certainly be improved at committee stage, as is the case with any other bill which is introduced. And of course, as a member of the opposition, I do not have access to the vast resources that the government has in preparing legislation. But this is an honest effort to tackle a genuine problem which is facing about 12,000 mortgage holders in Ibrc immediately, and which could potentially face many more thousand of mortgage holders over the period ahead. Last week, on the eve of an appearance before the Joint Oireachtas Finance Committee, the Special Liquidators of Ibrc, KPMG, issued a statement confirming that they had reached agreement with the remaining bidders for the loan book, whereby they had now agreed to voluntarily comply with the Code of Conduct and Mortgage Arrears. And of course that is better than nothing, but it really isn't good enough, and I will explain why. Because it is utterly unenforceable. It has no legal standing whatsoever, and this was confirmed by the liquidators when they appeared before the Finance Committee last Wednesday. It will not be written down on any piece of paper, and if any issue arises, if any dispute arises between the mortgage holder and the foreign-owned fund, which would now be in possession of the mortgage holder has nowhere to turn. There is nobody there to police or enforce the implementation of the Code of Conduct and Mortgage Arrears in that scenario. So in that respect, if a dispute does arise, it is simply not resolvable, because nowhere can you go as a consumer to have the issue dealt with. And one suggestion that the government has made in defence of not legislating on this issue is that if an application for repossession came before a court in this country and the financial institution had not complied with the Code of Conduct on Mortgage Arrears, the government is saying that that judge would not grant a repossession order in respect of that property. Well, that is cold comfort for the thousands of mortgage holders out there who are potentially going to be facing this situation. And a lot of harm and distress can be caused to a family short of repossession. Why would we allow a situation where people are facing that prospect, where they are facing that threat in the absence of a code of conduct? The bottom line from our point of view is that any mortgage loan issued in this country should be subject to the full protection of the Code of Conduct and Mortgage Arrears, and also that mortgage holder should have access to the Financial Services Ombudsman. I acknowledge that the current situation facing IBRC mortgage holders is not satisfactory. Currently, IBRC in special liquidation is not a regulated entity. It is not subject to the mortgage arrears resolution targets, and its mortgage holders have no recourse at present to the Financial Services Ombudsman. But it is controlled by a special liquidator appointed by the Minister for Finance under special legislation passed by this House 13 months ago, and no one has disputed the fact that IBRC is currently complying with the Code of Conduct in full. And the point is that the current IBRC in liquidation inherited some level of infrastructure because it was previously a regulated entity and had some capacity to comply with the code, which it is continuing to do. There are over 760,000 family home mortgages in Ireland today, so we have to get this issue right, not just for the 12,000 IBRC mortgage holders, but for everybody else as well, because there is a prospect that other banks exiting this country, and they've already made their public declarations in that regard, will be selling their residential mortgage book. And indeed, it would be open to any of the banks staying in Ireland to pursue a similar path as well. And the government itself has acknowledged that there is a problem here. The government is planning a piece of legislation, the sale of loan books to unregulated third parties, to deal with this issue. But it is not due to be published until next year, 2015, and that will come far too late for the IBRC mortgage holders, and possibly far too late for many other mortgage holders as well if their bank decides to sell on their mortgage. And by delaying that legislation, the government is, in a sense, creating an incentive for those banks to sell on the mortgage book in advance of that legislation. By means of avoiding that legislation, they could sell the mortgage book in advance. And we know that there are many banks exiting the Irish market at the present time, unfortunately. So the question to be asked is, well, what would a person be losing if they no longer had access to the Code of Conduct on mortgage arrears, if that is no longer binding and mandatory? Well, as we know, it is a vital consumer protection code, and it provides, for example, that the banks must have proper policies and procedures for dealing with a distressed borrower. A foreign-owned fund outside of the code would have no such obligation. A bank under the code must have properly trained staff to deal with customers who are experiencing mortgage arrears. Again, no such requirement would apply to a foreign-owned fund. It places restrictions on the ability of a lender to impose surcharge interest on a borrower unless the borrower is not cooperating. It requires a financial institution to work through a series of sustainable solution options with a borrower in difficulty with their mortgage. And it provides an 8-month moratorium on the commencement of legal proceedings from when a person enters into an arrears situation. No legal proceedings can commence for an 8-month period, and that is absolutely vital. So the government has said that, well, you know, if you lose the Code of Conduct, then you have your mortgage agreement, and that the mortgage agreement will continue to apply to the new financial institution and the mortgage holder, and that is of course correct. But as I have pointed out, the mortgage agreement is so heavily constituted in favour of the lender that really it is of very little benefit to the consumer indeed. I took the opportunity last Ceann Comhairle to look at my own mortgage agreement, and also to look at the Irish Banking Federation pro forma mortgage deed, and it states very clearly that enforcement action can be taken in respect of a mortgage holder if any of the following enforcement events occur, one of which would be if the borrower fails to discharge any of the secured liabilities when they ought to be paid or discharged. And in that scenario, the lender has the authority immediately to call in the loan in full, and that it would be deemed to be a formal enforcement event. And as we know, in that situation, they can then go down the road of commencing legal action immediately, because the 8-month moratorium simply would not apply. So that is the harsh, naked truth that mortgage holders face. Now, I hope that that situation would never come to pass for anybody whose mortgage is sold, but that is a potential scenario, Minister, that if the code does not apply, all that you are left with is your original mortgage contract, and that is constructed so firmly in favour of the lender that it affords essentially no protection to the borrower. And if you miss one repayment, they are technically within their rights as a financial institution to call in your loan and issue a formal letter seeking full repayment of the mortgage. And if you cannot comply, which of course nobody would be able to comply. They would again be within their right, in the absence of the code, to immediately commence legal proceedings. That scenario is completely unacceptable to me, and I would expect it is also completely unacceptable to government, and that is why we need to move on this issue. We also know from parliamentary questions last Count Corley that under the relationship framework which has been signed between the Minister and the different banks, AIB, for example, can sell a loan book up to the value of €100 million without even having to consult the Minister. The corresponding figure for permanent TSB is €50 million. Now that opens up a potential scenario where the banks can essentially slice up their loan book into smaller parcels and sell those particular parcels without even having to consult with Merrion Street. Now that is unacceptable, and I think the relationship framework needs to be revised in that respect. The bottom line from our point of view is that retaining the same rights and protections in the Code of Conduct on mortgage arrears and access to the Financial Services Ombudsman is an absolute must, and we want to insist that that would take place. The issue of recourse to the Ombudsman has been largely overlooked in this debate, but it is a critically important issue. It is the statutory body for dealing with complaints from consumers in relation to financial products. Now, it also has to be said that it was open to the Minister for Finance at any time to issue a direction order under Section 9 of the Ibrc Act of last year to the special liquidators, requiring them to put in a condition in relation to the sale of the mortgage book, which would require the purchasers of the Ibrc mortgage book to comply with the Code of Conduct on mortgage arrears. That did not happen. Now, that should have happened, and it should have happened several months ago. And what our bill does is it would make sure that it is a condition of the sale of the mortgage book that the Code of Conduct would be fully honoured, and that would be legally binding, and it would be based on statute. We also know that the central bank is not satisfied with what is happening here. The central bank has contacted the Department of Finance and has made its views crystal clear that it believes that when a mortgage book is sold, that the Code of Conduct on mortgage arrears must continue to apply. And this voluntary gentleman's agreement is really a no man's land scenario, which in my view is not acceptable. Now, I have read the Department's statement this afternoon in response to our bill, and I welcome the fact that the bill is not being opposed at second stage. But I also believe that it is essential that this issue is legislated immediately. We cannot wait, Minister, until 2015 for the government to come forward with this bill. You should accept the bill at second stage and immediately move it to committee stage, and let's make the amendments and the improvements to the bill that are necessary so that it can be enacted immediately, and it can be enacted in time for the Ibrc mortgage holders who are facing a perilous scenario at this point in time. I acknowledge, Last Count Corley, that the bill does not address the situation that about 5,500 mortgage holders whose mortgages have already been sold by regulated entities to unregulated third parties. I think Pepper, for example, holds some of those mortgages. We know that GE sold some mortgages, and Bank of Scotland Ireland, Halifax sold some mortgages. But the advice that we received is that that is a far more difficult issue to legislate for, and my proposal is that you stop the leak immediately, and that you make sure that for any future sales that this condition would be stitched in, and that you then examine the options available to deal with the 5,500 mortgage holders whose mortgages are already legally outside of the Code of Conduct on mortgage arrears, even though the owners of those mortgages as such are currently in voluntary compliance with the Code of Conduct. But as I said, voluntary compliance is simply not an option as far as I'm concerned, because when I read it the weekend, for example, that the National Consumer Agency raised with the Department of Finance concerns that it received about 88 separate complaints in respect of loans, albeit not mortgages, but other loans which were sold to an unregulated third party. And the NCA is receiving complaints in respect of the way that those loans are currently being handled. That is the scenario that could lie before us in respect of the Ibrc mortgages if we do not deal with this issue immediately. We also know, Last Count Corley, that from media reports there are 4 US giant private equity and investment firms left in the race for the Ibrc mortgages: Lone Star Funds, Apollo Global Management, Carval Investors and Oak Tree Capital. They have until the 14th of March to submit their final bids in respect of the €1.8 billion Ibrc loan book. The indications are that there is far greater interest in the non-performing loans, and this is a scenario that really is quite concerning. If you have a loan, a mortgage, that is currently in some level of difficulty, but you have equity in your home, and if your mortgage ends up with one of these unregulated third parties, there will be a tremendous incentive for them to move on you immediately. They will be outside of the code of conduct, they will be perfectly within their rights to do so, and if they buy your loan at, say, 50 cent in the euro, but you have equity in your home, they can sell that home and they can wipe the loan balance immediately, and they will make a 50%. They will make a 50 cent in the euro profit in respect of your loan. So we are leaving the message with government loud and clear. We welcome the fact that this bill is being accepted at second stage, but that is not good enough. It doesn't go far enough. We want the spirit of this legislation to be implemented immediately, so that the 12,000 or so Ibrc mortgage holders will continue to have the same binding and statutory consumer protections as every other mortgage holder in the country. My view is that they deserve nothing more and nothing less than that. Thank you very much.